Let's start the recording and let's begin. Once again, happy Monday and happy week to all. For all those of you who are watching us for the first time, welcome to our family. Two things I would recommend you to do. First of all, watch the video tour to make sure you understand how you use the members area of the Academy in your favor. And of course, the trading report, which you will receive after the live trading room. It takes some time to prepare everything. So once it's ready, it will be uploaded for you and of course shared in the Telegram channels, emails, and would be inside the members area for you. Just make sure, please, if you are watching it for the first time, to watch the video explaining how to use this report. That's the most important webinars to watch in order to understand all the terms we are using, cycles, divergences, waves, and so on. And the next two parts are the summary of the live trading room inside the table. So you can always go back and refer to the idea. What you have to do is simply click on the image. It opens the image for you with our expectations. What you would see there is, in short, again, a summary from the live trading room with what do we expect from the pair to happen, divergences, cycles, and so on. All right, so let's then go to the last part, which is the comments. Here you would be able to find the time frames and the explanations of course, for each different pair, its own explanation. What do we see? This is not a replacement for the live trading room. This is a summary. If you have the ability to watch the live meeting live, or at least on recording, it's very important. If not, the report is there to assist you. So let's begin. We will go over the trading report and our best opportunities. We start with the euro pairs as always. And the first one that will be actually removed from the list will be the euro versus the dollar. And I will explain what does it mean will be removed and why. So first of all, we have been looking for buy opportunities with this double cycle, which had a bullish divergence and suggested a buy according to the double cycle towards 38.2 level. Now, as a corrective cycle, we might be always exposed to waves or a range. In that case, we can look at the daily chart and we can say, okay, so daily had anything that looked like a double cycle correction and also could easily fit inside what will be answering a definition of a range. Of course, we can then argue and say, but this is a triple cycle with triple higher highs, higher lows, so it should continue higher. And that's exactly where it all started from for us in the previous week. Besides that, it was and still holding the area of 61.8 Fibonacci retrace of this triple rally here, still holding it, right? But, and here comes the but, when the momentum to the upside is real and a hidden divergence is in play, we could anticipate a rally to begin on the lower time frame to start and see an attempt to create a bullish trend. How is bullish trend created? By making higher highs, higher lows. This is the pure definition of the bullish trend. Going to one lower time frame, what do we see? Lack of ability to create this structure we just described. One shot to the upside, one shot to the downside, another attempt with a shot to the upside, which blocks on the previous top, even lower, without creating the structure of higher highs. This is a suspicious sign, suspicious behavior from the pair. Lack of momentum comes with a very important decisions traders have to do in times. You know, it doesn't matter how beautiful we draw the lines, right? This looks impressive, right? But it doesn't matter how well we draw the lines. The market will move according to the way the market should move. And the fact that the market does not manage to gain the momentum that we are expecting is a very, very serious red bulb that should tell us be careful, the buyers are not there yet. And what does that mean for future? Does that necessarily mean we are going for a new low, like 110 or lower? Or does that mean we are going to continue and fight here? There are too many variations and only one fact. There is no momentum to the upside as it was expected to be due to the technical reasons. And there is no yet momentum to the downside by breaking significant levels. In such case, what's the best thing to do? Neutral. And this is exactly what happens with the euro versus the dollar right now. Neutral mode. Next one of the euros is the euro versus the Canadian. A reminder of our long-term ride here. This is the triple cycle we are working with. This is the double cycle that is developing. And according to that, it still has a room to go further. Right now, this is how it develops on the weekly time frame. We do not have any divergence formed and confirmed on this structure of the double cycle. The level was broken, no divergence in the ending part. Daily time frame got a very serious impulsive wave right here, right? Again, without an ending, obvious ending divergence. So the expectations for the euro versus the CAD are yet continue lower. The level we could pay attention to, next massive level to pay attention to, would be the area of 142. Of course, it could be slightly higher, slightly lower. So what does the pair have for us right now? Of course, all those of you who are riding the move down unchanged, just manage your position. If it comes with trailing stop loss, if it comes with partial cash out, or any other management you have using your strategies, right? But the direction was and remains bearish. What does the pair have currently? Short-term probability for a correction. So if we take a look, quick observation, what does the pair have for us right now? Some sort of a triple cycle, bullish divergence, so we can easily be exposed to waves or to ranging correction, which we expect further on to move lower according to the long-term cycle. So the bottom line, the short term could provide any sort of rallies, but the long-term view, which is the one we trade for the euro CAD, remains on. Invalidation for such a plan would be this double spots connection or the double wave, developing double wave correction trend line. As long as it holds, the double wave correction remains on. Okay, this is for the euro versus the CAD, which remains bearish for us. Another one on our list, which is riding for a good time now, this is the euro versus the Aussie. Now, what do we have on this pair? A triple cycle that we work with from the weekly, meaning we expect two waves correction or a range. And I say or because corrective cycles develop in ranging variation. Variation could be a pattern or simply flat move, or more commonly two waves, A, B, C, D, or 1, 2, 3, 4, or you name it. It doesn't matter how. So that's according to the cycles is our expectation. As per divergences, the last divergence from the weekly was and remains a bearish hidden divergence, which should be helping the pair to go lower. The daily time frame, which had the confirmation for us right here with the ending divergence, goes good so far, and the most recent trend line on this rally and the big trend line of this rally were broken and yet continue lower. What's the expectations from this pair? According to the weekly cycle, it has the room lower. According to the daily developing double wave here, it also has some room lower. So the bearish pressure was and remains on for this pair. Could we be exposed to some corrections? Yes, and they are very welcome right now. Why? Because if we connect these two cycles as they develop, the daily and the 4-hour chart, which would be a cycle by itself, we would find out that we have a very, very nice magnet zone of cycles, two different cycles by themselves, a very beautiful divergence developing on the short term. So every drop down to happen from this moment, here, or if there's more to come, should be coming with a fight. And this fight is what could take the Euro Aussie for the short term upside. Before it most likely will continue lower. How to work out with such reversals? Because you're trading, if you're trading upside, because you are trading against the higher time frame forces, the obvious thing to do is to verify a reversal. The most common reversals signs are two false breakouts and higher highs, and we can clearly see that we are facing the false breakouts. 1, 2. We never yet are facing higher highs here. And the other structure which we can work with is triple higher highs, triple higher lows. Why this is an alternative? Because if we assume, let's look at draw it as with pink colors. If we assume that the daily and the 4-hour could suggest some sort of correction, right? And let's say this would be the two waves. Then the first leg of this pink cycle might be the one that will create triple higher highs, higher lows. Correction here, and another push this way. You see how the blue fits in? It's just difference of the time frames, okay? So this is the Euro versus the Aussie. The long term does not change. The short term, if managed to create the higher highs, could provide opportunity like this one to start looking for setups with retraces further on. So the Euro Aussie provides short-term opportunities if managed to break the higher highs, and for long-term opportunities, again, does not change the game, as sell the rally was and remains the plan. For all those who are involved, there is nothing here to do by closing full positions rather than just partial. This is for the Euro versus the Aussie. Euro Kiwi is still too early for discussions. Following once becomes relevant would come in play. Euro versus the pound is another one from our list. According to the weekly cycle, this triple cycle, we are after two waves correction. It looks like two waves correction, but they never had any ending divergence. So it seems like we are into consolidation correction, and that's pretty much it. The weekly last divergence developing, even though the levels are suspicious as they're too flat, is bearish hidden divergence. The daily double cycle that comes from here and from, just draw it, and from here suggests the area of the 090, 091 as a critical zone. We've already been around this area. The divergence is something that it's almost impossible to deny from the daily time frame, so it's only question of time when this correction will take place. Previous week we had this trendline breakout which did not hold. Let me just clean the charts here. This one, this trendline breakout after the second false breakout did not hold and the high was invalidated, so the sell idea below the trendline failed. Now the question is, what's next? The best thing for us, of course, is to start to create lower lows, and which the pair still refuse to do, right? This is for the longer view. However, on the short term, the 1 hour chart creates for us here a structure of a special cycle or triple lower highs, triple lower lows, and this could become as two waves. Of course, we can also work with these two waves, just the trend line of the two spots is too flat. So what we want to see is these two waves, trend line, and if it manages to make the breakout after that, this could be the opportunity with pretty small risk, very likely, and big reward possibility that will hit the euro pound as an opportunity to trade. So watching for this pair, and again, this is the critical zone we are working with, coming from two cycles, a massive resistance from the weekly as well, psychological level of 90. We are looking for the corrections. The daily divergence is again something that's hard to deny. No obvious setups here, and that's very, very important to understand right now. There is no obvious setup that comes from the daily. We don't have lower lows, or the 4 hour. We again don't have lower lows or any new break of trend line, which could be obvious in play there. So again, if it's not clear, wait for it to be clear, right? Forcing a sell just because it looks like a sell is normally not too smart thing to do. So this is the list from the euros as the beginning of the for the week. Euro Kiwi, as I mentioned before, would be on a watch list. Once it triggers, it will become an opportunity, and of course in the report. Same with the Euro Franc, which currently building up the second leg from the weekly time frame, watching that closely, building up this divergence, and the same thing happens on the daily, and it's building up, yet only as potential, as we do not have any signs of reversals. We don't have false breakouts yet. We do not have any higher highs created, so it's early on the watch list. Might be developed within several days, would be up, ready for us once it's clear. So that's from the pound, from the euros. The next ones would be the pounds. As for now, we had only 1 pound in play. This is the pound versus the Aussie. So what are we trading on the pound versus the Aussie? The triple cycle from the weekly that should bring us two waves here, or a range toward the level of 50% Fibonacci retrace, or as long as there are no signs against on the same weekly time frame. The daily was the one that is developing this double wave correction right here, and we got involved in the sell after the correction was over. Trend line breakout. We're running pretty beautiful so far, and now we do need to pay attention to the small slowdown building up in this pair. This is a divergence. This is the level of 100, and I say small because look what happens despite the level, despite the divergence and double cycle. We do not have any false breakouts, even on the lower time frame. We do not have any structure of 3 higher highs, 3 higher lows yet. So there are no official reversals. So the momentum yet remains bearish for this pair. And according to the weekly triple cycle, we should be heading towards 50%. It is the 173 area. And if we measure the Fibonacci expansion on a daily cycle as it develops on the corrective area, guess what? The 161.8 fits in this magnet zone. So from one side, this magnet area, but no reversal signs. From the other side, the one from the bottom, which looks too inviting. So any rallies as for now are still for sale. And as for now, we all know what's to come from Britain these times. The rumors, expectations of the elections and the impact it might have on Britain, first of all, and on the entire area with the Eurozone related, of course, might be game-changing for all the pounds. So it's important to remember that if things change, the structures might change. And if the structures might change, the technical view will have to be adjusted. As for now, it's not. It's not there. It's not changed. Only potential. Few more of the pounds are building up for us. One of them is the pound versus the dollar by itself. The daily is an amazing cycle that we are working right here with a triple structure. Weekly is an amazing opportunity with this cycle by itself and the divergence it has. We don't have, though, any reversals yet. And by reversals, I mean any convergence by making higher highs or structure of higher highs, higher lows. It's simply not there. Therefore, it's not ready to trade yet. Same with the pound franc, right? The levels from the weekly, the divergence on the daily cycle looks amazing, but we do not yet have any new structure. False breakouts, higher highs, false breakouts and trendline breakout, or simply higher highs, higher lows, 3 in a row. That's why, as per the pound, the only one that we are still working with, as for now, is the pound Aussie, and we're holding its sales going on for several weeks in a row now. And now we are into the Pacifics, which been much better for us among them all on the last week. The first one, Aussie versus the Canadian. Wonderful pair, triple cycle from the weekly. Bullish divergence in play, expecting of 2 waves correction. Daily cycle by itself. Of course, we can take a look on this. We can go with the triple descending. They all lead to the same conclusion. 090 as a psychological area. So simply beautiful ride. We expect this area first of all, and if the momentum will continue and hold as we expect, we can go all the way up to the weekly cycles level. So the bullish momentum that we started to spot previous week with the break of this trend line and then the creation of the higher highs is on, it's going on, and it's going nowhere unchanged. What do we need to pay attention to? The fact that the 4-hour chart is building up here now. Most likely the 3 higher highs, 3 higher lows, which would be the first daily leg. We will expect some sort of retraces here, and then the second daily leg to start and be developed. I want you to remember that the possibilities for the corrections according to the daily are always two waves or deep range. As much as we might not like it, this is always a possibility to remember and to respect. And if that's the way the market will decide to go and develop based on, it will have to be respected. As for now, it doesn't look like that, but we know how random the moves could suddenly become without any previous note or notification. So the Aussie CAD was and remains bullish for us, unchanged at that moment. But we will definitely have to pay attention how this 4-hour chart triple cycle develops. It looks like it's going to be the first daily cycle, then correction and continuation. Will that be this way? Time will judge, time will tell. Aussie versus the dollar was our next one. Now, it's very important development here. So what do we have from the Aussie dollar? We can break it into 2 cycles or 3 cycles with a bullish divergence. One-time appearance here, a bit problematic, of course, with what happened on in the beginning of the year. The bullish divergence is there in play without a doubt, and we would expect 2 waves from the daily chart, which we got. But the problem is now that the daily and the weekly lost synchronization. What does that mean? While the weekly was bullish and is still bullish according to the cycle, has the room to push further, the daily has now the 2 waves correction and the bearish divergence. This is what I call a lack of synchronization. While the weekly hints upside, the daily already hints for correction. So which of them is going to win? Theoretically, as long as this trend line holds, the pressure should remain bullish. With this divergence happen, the 4-hour best to be corrective, and corrective from the 4-hour means 2 waves or a range. That's how corrections go, right? And then we would expect a further continuation upside. The trend line that it has for us right here would be the break of the trend line, would be an invalidation for the bullish momentum. Why? Because this is currently a structure of the ABCD. ABCD would be as a corrective cycle, and if it breaks below that, there is a good chance that we are going to see new low. So what exactly will happen, we don't know. We never trade expectations, we trade facts. The fact is that the short term currently, best thing to do is take the money from, if you are involved in the longs, because of the loss of synchronization. Too many warning signs, not just the daily 2 legs, but each of the daily legs is a cycle by itself on one lower time frame, verifying it as a cycle, right? This is a cycle, and this is a cycle. Both have separate divergences. And that's where the warning sign is. Lack of synchronization, lack of attraction from our side as traders, and simply neutral on the short term. In break below the trend line, the rising trend line would be also invalidation for the bullish plan. Which brings me to the next pair, is the Aussie franc, and this one has pretty much the same structure. Beautiful development from the weekly with the bullish divergence. Once again, one problematic low from the beginning of the year and a lot of cash outs. The very long-term observation also suggests massive buys expected. So it's only a question of time when it will take place. The weekly suggested up, the trend line was broken. We were bullish from this moment, and it was a great call for us. and we had the rally, which is blocked by two waves and temporary divergence. Does that change the weekly cycle? No. Does that mean we currently have lack of synchronization between the higher time frames and the smaller time frames? Yes. The best thing to do in such case is to get exposed to two waves correction or sort of a range. And then, and only then, look for the next buy opportunities. This is for those who trade short term. And for those who are riding the buys from the trendline breakout, what to do in such cases where we lose the synchronization? Simple. Management. Management could be partial cash out, trailing stop to break even, trailing the stop loss according to technical signs like last lower lows, higher lows, Fibonacci levels, or any other techniques you have, or any combination of the two. Okay? But there is one thing which we have to remember always. When the market tells be in, be in. And when the market tells do not hold full exposure or be careful or time to make management, do that. None of the traders in the entire world can know better than the market how it's going to be developed. Okay? When you see the signs to be in, be there. When you see the signs to step back, do it. No one is smarter than the market, and it's important to remember that. And the Aussie franc is that exactly. Both daily and the 4-hour. Two time frames are against the weekly. That changes the game on the shorter. It should provide the buy opportunities after two waves or a range again, but it mainly provides the opportunity to cash out if you are involved in previous longs. So that's for the Aussie versus the franc. Again, it does not change the weekly cycle. It does change the management, the best management to be applied at the current scenario, which is cashing out the longs. So that's from the Aussies. Aussie Kiwi is a pair I watch it again, only a potential like the Aussie franc. No higher highs, no false breakouts yet. So on the watch list, a bit early for discussion. Aussie CAD among them all as direct exposure to the Australians. Besides the pound Aussie ride and the Euro Aussie ride we have, Aussie CAD is another great one. Maybe the best among them all. The next one from the New Zealandians was the New Zealandian Canadian and still is. So what do we trade on this pair? Quick reminder, this is our view, bullish after the break of this falling trend line. Why? This is a triple cycle. We can of course break it this way, triple descending, two false breakouts in play, trend line in play, higher highs in play. The expectations are for two waves correction back to 50% Fibonacci of this, or range. We already have the two false breakout, so this could go and become some sort of a range. So the bullish view was and remains. What do we have to pay attention to right now? As closer as we get to the previous highs, this is where it will start to be a clearance zone. What is a clearance zone? For all those who ride the sells or join the late sells, if you miss the first train, the stop loss location would be the previous highs. When they are cleaned, a bearish reaction could start. 4-hour chart is building up the special cycle correction. Very critical zones are in play right now, 161.8, but mainly we have to pay attention to this area, the 261.8, for a full expansion of a special cycle. Also, clearance zone. Okay, so KiwiCAD remains bullish yet. We don't have a blockage, a full blockage for cash out as for now. So we are riding the buys, but we definitely need to pay attention how the 4-hour chart would be developed. Once it stops by making two false breakouts and start to create lower lows, for example, even after two false breakouts, it's enough in such case. It's a time to make a cash out and look for the next opportunity. Meanwhile, we are riding the buys. Next one's Canadian pairs, dollar versus the Canadian. We previous week were looking for sell opportunities. The pair had them on the very short view, but look what happens here. It is failing to create a real momentum. Every new drop reacted with a rally. I dislike such price behavior, and also the daily structure of the lower lows looks like a bullish divergence. It does not provide any opportunity from my point of view here to deal with, because it is against the cycle structure from the higher time frame. However, the structure itself currently is enough to say avoid the sells. And this is exactly what I'm going to do right now. Dollar CAD is moving to neutral. I was expecting to see new lows, ideally to 129 area. It never managed to gain momentum, dancing around the same zone for too long. It's a sign to move neutral. And the next one of the CADs is the CAD versus the franc. According to the long term, the idea is bullish here, so we are after the buys. The daily was the one that suggested us this structure after making the two waves correction here and here. False breakout came in play, bullish divergence was in play, trendline broke, and higher highs were created. All that brings a good bullish sign, with of course with an observation of this low to be the invalidation low. Right now we are building up a pullback. A bullish hidden divergence is building up for a trend continuation, and mainly if this is a bullish hidden divergence, the 4-hour would have to be a bullish divergence by itself. If we measure it this way, there is no divergence currently in play, so some time would be required here. It might go and play here for some time to rebuild its divergence. Once and if done, then and only then we would be looking to mark this as a trend line. Again, depends on how it would be developed, and break above that would provide a buy opportunity. So for long term, it still looks good. For short term, we do not have any new opportunity in play. So watching, nothing else to do here. And of course, for all those who are involved only for the long term, nothing changed here as per the cycle expectations. That's the last trendline breakout. As long as this area holds, everything remains still. This is from the list as for the beginning of the week. Several pairs, again, as I said before, the Pacifics are the best on the last few weeks. That's mainly the Australian pairs. Several others are building up and would become interesting. I assume pound pairs after the elections should be again interesting. Same with like the francs as well. The euro franc levels look very promising. We will need to pay attention to them. Before I go to the commodities, are there any questions about anything explained? If yes, please write it down. Okay, seems not. So we continue, and gold and silver are our main rock stars. Silver, which became bullish after the break of these two waves, made us having here the double wave from the weekly cycle, yeah, but the double wave development. So the way that the blue cycle develops should be something like that. As per the targets, we have this massive magnet zone, and very likely to assume we are heading there exactly. So my personal view on the silver was and remains bullish after the break of this trend line. I do expect it to go further. No divergence against on the daily. 4-hour is a bullish divergence, so every drop basically this way or two waves, doesn't matter, should be the one that will provide us reasons to start looking for the continuation. Same with gold. The magnet area there is around 1460, 1480. If we take a look on that as a ranging correction, this is where we are heading. Of course, if we look at it as 161.8 like this, then we still have a big room further, but too early to decide that. So this is from the weekly cycle. From the monthly special cycle, 50% is the 1480. This is the monthly special cycle I refer to. That's the two waves that we are building up. This is the divergence that is building up. Once this would be combined in the weekly, it's a game over. The deviation zone is already in play. Deviation zone is 10% difference of the cycle. So if we take a look on this rally, 10% from the entire rally is the deviation zone, which would create a box for it. No divergence against yet, even though it is on extreme levels, but I still believe that the slowdown here will take some time, and it will not be one shot. From my point of view, silver has more room for the rally, as it also started its rally later. The gold already has one false breakout. I expect to see one more false breakout coming in place. But for all those of you who are involved from the very first movement that we had there, or joined on the retraces, we get a couple of retraces on the go. It's a great place to make the money, or at least make sure you don't leave it to the market if a random move to the downside begins. So gold and silver running great. What about the oil and natural gas, you ask? Okay, so natural gas, we've been involved with the invest, which kicked as a break even. For those who were involved with the trendline breakout. For all those who are involved from the low, which even though the 210 was missed, but for all those who got in with the close level to the 210, unchanged. As per new opportunities, I still believe we are going up. I just don't find any interesting setup yet. By ideal, we should be experiencing here something like that, and then trendline breakout. Will that be ideal or not? I don't know to say. It's too early to judge. Personally, I think the levels are amazing to look for buy opportunities. Where exactly from? Currently, I don't see a setup. So, waiting. And the oil, well, honestly, I have no read here. This is the most honest thing I can tell you. The weekly, I see nothing as per cycles. The daily had a double cycle and reached 32.8 retrace. Game over. I have no clue what is the further cycle to look at on the oil. Personally, to me, it's completely unclear at that moment. I don't know. And of course, we have our long-term run from the coffee. Invest 98 area as entry, unchanged as per the last update, which was stop loss to break even, risk free on the invest. German DAX was our new addition to the list from previous week, and after this cycle, I expect 2 waves correction or any sort of a range. The 4-hour had this structure for us, so we were expecting from here to move lower. It did. Now it has some sort of bullish signs. Good place to protect or manage partially. I still think, not for our chart speaking, but daily speaking, this is a good corrective zone. So from my point of view, it's still after second leg sells. The best sign, of course, for that would be if we manage to break this rising trend line. It's not there yet, so hard to say it's ready for anything longer. Bearish view from my point of view remains on. Nothing else to say. As per stocks, there are several developing, which we might discuss about on the previous, on the continuation of the week. And the long-term Deutsche Bank unchanged as per this cycle. Again, long-term invest, nothing here on the short term. Fundamentally, it looks terrible. Technically, it looks like an amazing opportunity. Of course, break and creation of higher highs would be a good sign here. We aren't there yet, so nothing really changed there as well. Cryptos currently out of the list, as I don't see anything clear there. And that's pretty much it for the beginning of the week. My best pairs, as for the beginning of the week, most interesting pairs to watch, of course, Aussie CAD and Kiwi CAD, and Pound Aussie. Mainly running, not developing newly. The next ones to watch for all those who are not involved, EuroCAD from my point of view is a great opportunity. EuroPound should be as well, and I believe that after the elections we might see more interesting pairs coming from the pounds family. As per the commodities, gold and silver, both are amazing. So that's pretty much it, guys, for Monday, for today, for the beginning of the week. What's my view on pound New Zealandian? Well, my personal view for long term is buy, and I will explain. This is a triple cycle as I see that, so I would be looking to trade here. Now the weekly must fit in, and it does. It's a triple cycle upside, double cycle correction, which is currently developing, and I assume this is going to finish on the coming weeks with a beautiful bullish divergence. Again, as for now, it's an assumption only. And yeah, I believe that the daily would fit in here with this divergence, or complete is with something like that, and better divergence. Too early to judge, yes, but I do think it's coming to a critical zone for massive buys. I don't think it's ready. I think it's building up. We also don't have any reversals, right? We don't have false breakouts, even though it looks like a potential. We don't have higher highs, so it's just yet an assumption. Okay, that's my view on the pound New Zealand. It's coming. It's coming. I just think it's too early. That's pretty much it. All right, so guys, thank you very much for being here. Of course, I'll see you in the Telegram groups. Thank you for being here. Have a wonderful week and evening. I'll see you around. Bye for now.